At this stage, early stage tokens move faster.
Yep.
And so if it is showing network adoption, even though Solana's an amazing project, I love it, it's moving super fast, the chances are it will outperform. So my use of capital should switch into the fastest horse.
Raoul Pal, a well-known cryptocurrency investor, has issued a warning about SUI, a lesser-known cryptocurrency, noting that its current chart pattern resembles a wedge. This suggests potential volatility and the need for investors to exercise caution. Paul emphasized the use of the term wedge to describe chart patterns such as flags, pennants, and triangles, detailing his analysis of potential cryptocurrency market movements. His opinion on SUI reflects a more cautious stance toward the cryptocurrency sector, having previously highlighted the challenges posed by market volatility and the need for increased vigilance from investors. His analysis also includes warnings about significant market pullbacks, reinforcing the prudent approach adopted in the face of the rapidly evolving digital asset markets. According to Raoul Pal, if you missed the 50x move of Solana, don't miss this coin. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Also, you can actually go back and look at like Solana previous cycle and then look at SUI or Ethereum the cycle before. They all kind of look similar style of things. So it gives you extra signal in that. The main cycle we look at is this observable 4-year cycle. And that is driven by actually the debt refinance cycle going back to 2008. People think it's to do with Bitcoin itself. It's not. All assets are doing the same thing. It's the same as the business cycle. It's the year-on-year rate of change equals the S&P, it equals the ISM. 2008, everyone reset interest rates to zero.
Yeah.
After several years, rates were allowed to go up, but everyone had reset their debts to this 3 to 5 year sector. It created this perfect 4-year cycle. Our analysis this time suggests that it might stretch by another year. People think it's preordained that it's 4 years. It's not. It's actually because they've actually extended the debt cycle out to 5 years right now. So we think it might extend. But that cycle's not going away. It's the same cycle that's driven the NASDAQ, Amazon stock, Tesla stock. The same cycle that's driven oil prices. I mean, you name it, it's the same thing. You see, when I approach the world of macro is just looking at global opportunity sets in any asset, anywhere in the world that makes you the most returns. That's really what we do. But we use economics to understand how the world works, because things like the business cycle drive returns of assets. So we use that framework and then we look at the assets that work. Generally speaking, in the past, I would have broader portfolios and shorter time horizons. My short-term time horizons, because we're trading economic data, might be 2 months to 6 months, and sometimes I do shorter term. But now we've got 2 mega trends, the biggest secular trends we've ever had, and we'll talk about why they are as they are, but they're so powerful that all you need to do is capture the trend.
Paul shared his latest insights on the cryptocurrency market. He focused on the major altcoins and the overall liquidity environment that could fuel the next big rally. According to Paul, the cryptocurrency market is gearing up for a turning point, but many segments of the ecosystem remain on hold. Bitcoin and Ethereum have already set the pace, while other cryptocurrencies are still waiting for momentum. He indicated that the Total 3 index, which excludes Bitcoin and Ethereum, is ready to break out of this holding pattern, meaning the altcoin market as a whole could be the next to move. Patience is key. The path is clear, but you should never expect absolute perfection. What matters is the overall trend. Paul shared a new chart of Ethereum and described its current phase as full port. The chart shows Ethereum emerging from a long consolidation phase that began in 2021 with increasingly higher lows consistently breaking through resistance. Regarding Solana, Paul stated that it is next to emerge from this holding pattern. The chart shows that Solana is encountering a key resistance level after a long period of accumulation. Regarding XRP, Paul stated that the full transfer is underway. Without providing further details, this could indicate that the XRP ecosystem is entering its next growth phase. SUI is waiting and will follow in Solana's footsteps. Dogecoin is also waiting and will only fully port once other altcoins have begun their transition. A heated debate among macroeconomic analysts regarding the Purchasing Managers Index, PMI, has reignited discussions among cryptocurrency traders about the potential Bitcoin peak in 2026. While the reliability of some traditional economic indicators is being questioned, the persistent contraction of the PMI is fueling speculation about an unusual extension of the Bitcoin bull market. Julian Battelle of Global Macro Investor GMI criticizes the use of certain common indicators on Wall Street, deeming them outdated or misinterpreted. GMI has developed a U.S. Business Cycle Index, USCIA, that incorporates predictive elements, including early signals from the labor market. This index begins to show signs of improvement as early as mid-2022, several months before the PMI and other indicators show a recovery. Furthermore, macroeconomic strategist Hendrik Zeeberg recommends caution when interpreting survey-based indicators. Zeeberg argues that the market should be more vigilant and not rely too heavily on the ISM, which has been contracting for over 7 months without yet triggering a full-blown recession. The relationship between ISM fluctuations and Bitcoin cycle peaks is a hot topic among macroeconomic investors like Raoul Pal. A weak ISM usually indicates a delayed economic recovery and a more prolonged market expansion. Despite current headwinds ranging from tariffs to weak global demand, this prolonged contraction could extend the overall economic cycle rather than end it. This could translate into a more gradual and sustained upward trend for Bitcoin prices. Paul explained why Bitcoin has not yet experienced the boom seen in previous cycles. This market strategist claims that Bitcoin is currently in an economic cycle, which he estimates to be 5 years long. This contrasts with the usual 4-year cycle that market participants are accustomed to. Specifically, Paul pointed out that Bitcoin tracks the ISM index, a chart that illustrates the strong correlation between the two. Bitcoin's implied price, based on the ISM, has moved in parallel with the ISM price, supporting his thesis. Paul also indicated that his recent findings show that in 2021-2022, debt maturities extended from 4 to 5 years, lengthening the economic cycle by 1 year. He concludes that the 4-year cycle is now 5 years long. However, he emphasizes that it is uncertain whether this trend will continue beyond the current cycle. According to him, it is still impossible to determine whether the next market cycle will last 5 years or revert to 4. Nevertheless, it is likely that this cycle will be 1 year longer. With the new 5.4-year debt maturity, the sine curve chart indicates that the ISM should peak in 2026. More specifically, Paul predicts that the most optimistic scenario will occur around the second quarter of next year. It's worth noting that Bitcoin closely tracks the ISM as previous charts have shown. Therefore, Paul also expects Bitcoin to peak at the same time as the indicators in the second quarter of 2026. Furthermore, Paul predicted that liquidity would peak before the ISM index. It's worth noting that the U.S. M2 money supply reached a new all-time high of $22.2 trillion, and the global M2 money supply continues to outpace Bitcoin. This suggests that both indicators should peak before the second quarter of 2026, and Bitcoin will eventually catch up, consistent with their correlation.